Welcome back to Depreciation Lab. In this particular video, we're going to log into your account and I'm going to show you live demo of entering the asset data. We're going to start with standard methods where I'm going to show you three examples of straight line method, diminishing balance method, declining balance method, or I should say geometric declining balance method, the one which is used in Indian Companies Act. And the third method, we already know, double declining method. And I will show you various factors, the edge cases where things can go wrong. What if you put wrong inputs in particular fields? What happens and how Depreciation Lab corrects it or stops you doing mistake unintentionally. So I'm already logged into my account. I have a zero asset. So we're going to go to standard method. Please note this is a free plan account. So as in earlier videos, you must have seen free plan gives you 10 assets and lifetime access to the Depreciation Lab where you can configure 10 assets up to 10 assets here like you can see here. And for all standard methods, that is a straight line method, declining balance method, and DDB method. And you can always export your reports for these 10 assets and manage it accordingly. So if you have a requirement of only 10 assets in your small business, you don't have to pay anything. You just log in and keep updating your asset details here. Now let's start with the first fixed asset addition. So here, so when you go to standard method here, and you'll see a input box or input area. So let's put first asset code. So we're going to start with SLN. So asset ID or asset code is important. And then we're going to put block. So let's put computers, or let's make it IT. And let's put laptops. And date of purchase, let's put 2020. And 50,000 is the value, and useful life 5 years, salvage value 5,000. We're going to start with our classic method. This is the currency selector, so I'm going to keep US dollars, but you can always mix and match any currency you want. And then tax rate here will show how much tax depreciation you can save. So as you know, if you're an accountant in any country, the depreciation is the tax deductible expense. So and also it's a charge to your P&L which is non-cash. So actually it saves you money in form of tax savings. Yes, there could be other laws, other rates which we understood in the MACRS method video, WDV India tax video. But here for the sake of simplification, let's suppose your depreciation cost at end of the year would be an X amount. For example, here it would be $9,000. 50,000 minus 5,000 equal to 45 divided by 9, so $9,000. Into your tax rate, multiply by your tax rate would be your tax shield. That's the simplification I can give you here. And that's how this whole calculation will work. So let's suppose your tax rate is 25 and your discount rate is 10. The discount rate we are adding here to calculate discounted value of the cash flow, the present value. That means how much this asset would save you money today and discounted by 10%, which is your rate of return. Since you're going to save money, that is the actual tax saving, cash you are saving. That is the assumption here, that what is the present value of those tax cash flows. So depreciation tax shields cash flow. Now we're not going to touch this sections here which are advanced part, but it is available in this particular subscription as well, so don't worry, we're going to look at that later. So we're going to run the calculation, and as you can see, as expected, we got 45,000 total depreciation, 5,000 is the final book value, or you can say salvage value, and 11,000 is the tax sheet. So if you go here and check, this is the annual summary, this is the monthly output or summary. Let's go check the details. So here you can see entire calculation. Since for this user, the financial year is January to December, the calculation for that year would be for 9 months, as you can see here, and remaining on the 2025. And tax shield, as you can see, it applying at the back end tax rate and deriving it the present value, as you can see here, 8335. This is the tax shield. This is how much tax you're going to save over a period of 5 years. And this is the present value of those tax shield or tax cash flow, you can say, tax savings cash flow. Now in the monthly summary, you can see entire depreciation monthly, which is useful for passing adjustments in your books of account. If you're using Depreciation Lab to do fixed asset accounting and depreciation accounting, this schedule will be really helpful. It can give you accurate depreciation entries to pass. The Depreciation Lab calculates everything from the date. So if this date could have been something as like 17th April, the depreciation for that month would be accordingly calculated. So let me show you that quickly. So I'll go back to input and let's change this date to 17th April. As you can see, the depreciation amount has changed accordingly. It is calculating 350 based on 17 April date, which would be around 16 days of depreciation. That is 30 minus 17. So this is the date when it starts. So $350 would be the depreciation for the month of April. Now you can always download this report. So you can download the annual CSV here, and I'll show you the file. As you can see, the annual summary, it's in only formatted version, and this is a CSV file with 2 decimals data points, which you can use it for any other further analysis basically, and you can import it to Power Query, or you can save it as Excel file for the future reference for audit purposes. Now let's go back and download monthly. So monthly schedule, of course, will have more data in only for one asset. It has many data because it has a monthly data point, and you can see everything here. And this would be really helpful in doing your monthly depreciation adjustments or depreciation expense booking in the P&L and the balance sheet. Now let's add the second asset, but before that, let's add some other events for this asset. We're going to add all events to show you the impact of these events and how Depreciation Lab handles it. Suppose this asset was purchased on 17th April 2020. Now suppose we had improvement. We had some repairing done to all the laptops or that particular laptop, and that repair took place after 2 years. So and the cost was 15,000, and the expected extension in useful life was 3 more years, and the new salvage value was 7,500. So now that means the life of the asset from 5 years will become 8 years, 5 plus 3, and the salvage value will now be replaced in the calculation from 5,000 to 7,500. Plus this amount will also be added to the gross cost, which is this. And suppose after 2 years from this date, or after 4 years from this date, in 2024 July, we had impairment, and the asset was impaired too. So here we're going to put the value of the asset, which has been now impaired. So that would be the net realizable value. Means that asset value would be asset minus depreciation, which would be equal to this value. So in form of accounting, suppose the written down value or a carrying amount of that asset is $1,000 and this amount is 3,000. So your new carrying value will become 3,000. So here we'll assume, since added improvement, let's keep this amount to $25,000. So you need to notice here about asset impairment, this particular note. I will zoom a bit. So as per IAS 36 and ASC 360 impairment rules, impairment value cannot exceed carrying value at the impairment date. If impairment value is below salvage value, revise the salvage value downward to continue depreciation. So these 2 points you need to be careful with. So let's see what happens with 25,000 recoverable value. And let's suppose at end of 2026, we are selling this asset for $10,000 with 500 as sales expenditure to dispose of the asset. We may have to put some advertisement or whatever the expense is. And I'll run the calculation. So we had some issue. We need to delete this. Now continue. Now you can see the impact of all events, and you can see summary here. Multi-asset summary. If we had more than one asset added, the all asset will be listed here. So this asset status shows disposed, and you can see the gain or loss. We had a loss of the asset, and there was an impairment event here. So we need to see what happened, and that you can see in monthly schedule better, because monthly schedule will show more details. So let's see the monthly schedule to see more insight. So here you can see we had an improvement where asset value increase, and then if you go to next page, We had this impairment. As you can see, the carrying value in June or 30th June was 32K, but at mid-July, the carrying value became 25. So that difference went to impairment loss. And you can see that value here as well. Or we will see the impairment loss in the downloaded schedule. So let's go to monthly schedule download. As you can see, the impairment loss on 15 July, which is difference between 32,909 and 25,000, and balance after new depreciation, because depreciation will also reset in that month. It will be 24,789.5. And at the 30th June, when we dispose of the asset, the carrying value was 16,000. So that has generated, if you compare these two, that has given us a loss of 6364, which is loss on disposal. So this is how Depreciation Lab handles your complex transaction as well, very smoothly, and gives you a perfect audited report. Now let's add another asset, or rather we can duplicate the existing asset. Since I'm demoing the Depreciation Lab, I'm gonna duplicate the entire asset. So we just have to change few things. Change to machinery. We're gonna give this plants as the block ID, and this would be a DB asset. And let's change this to 2022. As you can see, immediately the lab detects that there is a date conflict. This helps you and ensure that you always add correct and valid data. So let's make this 150,000. And useful life 10 years, and let's make it 15,000. And this time we're gonna click declining balance, and we'll keep this thing same. We're gonna directly go with the complex example. And here, let's suppose improvement in the machinery took place in 2024, and it was worth $50,000. 3 years is fine, and this is increased to 22,500. Then let's impair it in 2025, and let's make it 75,000. Technology and obsolescence, market decline. You can select the reason as well. I have given 4 reasons, but you can choose other reason as well. And let's dispose it in 2032. And the disposal value would be $35,000 and $5,000 expense. As I said in the other video where I was explaining about these methods, diminishing balance. So if you put salvage value 0, it won't calculate. You need a minimum $1 as a value. So if you put $1, we can see that here now. Let's see what happens with this kind of scenario. I'll run the calculation. And here you can see now we have 2 assets. So this was the earlier asset I showed you. So we need to move here. As you can see, the entire asset was depreciated very fast. So the formula triggered in and it applied the rate. So this is what happens when you put $1 as a salvage value. So let's go back and change it to something sensible. So I will grab this asset and focus here. And let's run it. You can save draft. So save draft is a feature when you are entering so many assets. Suppose you have a professional account and you are entering 50 assets for standard method, for activity, or for specialized. And midway you want to continue your work later, then you can always save the draft. So it will save the asset. Anyway, if you always run the calculation, it will save the data automatically. But suppose you have to save and you want to run calculation at another time, like tomorrow, and today you want to log off, it's fine. You can always save draft and come back tomorrow, log in with your ID and run the calculation, or at least complete your inputs. So I'm going to run the calculation again, and now you can see it all makes sense. It's more a realistic scenario. Here we can see overall summary in annual schedule. So we had various event, improvement, impairment, and more we can see in the monthly summary for more details. But if you see down multi-asset summary, we have now 2 assets and it shows the correct information. Now, if you had a multi-currency, you won't see total, which makes sense because you cannot total apples and banana together. Basically, multi-currency report will not have total. You have to analyze it independently. But since it is the same currency for these 2 assets, it will show total. Let me show you that in a live demo. So I'll go to this and make it euro and save and run. As you can see, it will not show the asset. Why? Because the currency also we have to change, and accordingly the data will be segregated. Now for the sake of this example, we're gonna keep everything US dollars. And let's download the monthly schedule. You can always see here, but it's better to download. This is our monthly schedule for the DB method. And one thing you have noticed, it will show schedule including the other asset, which was SLN method, the laptop asset. We did the first example. Now it is showing together with this asset as well, which is our plant block and machinery asset with declining balance method. Let me freeze the pan so we can go down. And here you can see all the events, which is the event was improvement. So accordingly, the value adjusted. Here the event was impairment. We had a massive loss because our carrying value as of June 30th, 2025 was 108,221. And it got reduced to $75,000 due to impairment, and that has resulted in 32K as an impairment loss, and the new carrying values resets to this plus the depreciation, which reduced a lot, which was another amount like 2067 to 1663.83, and so on till the asset was fully depreciated, and then we sold it for $35,000 minus the sale proceed expense, so net 30K, and we got profit of 7,500. The profit would always take the salvage value, carrying value into consideration. So $30,000 minus 22,500 would be your profit on disposal. And we'll now again see another example, third example for DDB. So let's go back to the lab. Now let's add one more asset with DDB method. So I'm going to again duplicate the previous asset. And let's change the data. So we're going to name it DDB FA001. And let's keep it CNC machine. And let's keep it 2021 13 March. Let's keep the cost same, salvage value same, and declining balance. And here you can see the factors. So if you put 1, it will be straight line. And the useful life must be at least 2 years if you want double declining balance method to work. So let's keep it 2, which is default, but you can choose other factors as well. And we're going to keep the scenario same, and let's change the useful life because it's extending here. I think let's keep the thing same and see what is the outcome. And we're going to run the calculation. And here you can see, you have to click here to see the overall KPI cards and overall scenario, that is gain or loss, and 3 assets summary, multi-asset summary. So you could see here, let's try to change these factors here, see what happens. So let's keep it 1 and let's save the draft and run calculation. You see depreciation becomes completely different and we get a loss instead of gain. And let's change this again, the factor to 1.5 and run calculation. Since the asset is depreciating faster, we always see a scenario where there is a profit when the asset is depreciating faster. When I kept the factor 1, we had a loss because the depreciation amount was moving slower year on year, right? Because this value and these events are fixed, while the depreciation regression or depreciations, how aggressive it is being calculated is different, higher with a higher factor. That's why when I decided to keep 1 factor, we had a loss because depreciation was going slower and the residual value was still there, right? While if I change the factor from 1 to 1.5 or 2, which was the first scenario, we had a gain, right? Or profit or gain on sale event. That's how the 3 methods, the standard methods are configured. As I said before, with the free account, You can configure up to 10 assets. It will just work for the 10 assets. You don't have to worry about, you don't have to pay anything if your requirement is only 10 assets. But if you want additional methods up to 50 inputs for the assets, you need to upgrade to professional plan. And also with the professional plan, you will get activity based, which is units of production method input, and also specialized, which is component method. So currently, as you can see, since I'm on a free plan, I don't have access to it. And if you want the bulk upload feature, you will need a business tier plan, which we'll have a look in the later stage of this video series. Thank you so much for watching.